to this webinar delivered by our partners Paycheck Plus. Many of you won't know me. I'm new into role. I've been in with Retail Excellence now for a couple of months, and I have to say, what a fascinating time to join a new business, particularly in the retail sector. It has been somewhat of a roller coaster ride with COVID, never a dull moment. Today's webinar comes at a very timely period insofar as obviously the employment wage subsidy scheme has just come about, replacing the temporary wage subsidy scheme. And this morning we were lucky enough to have 45 minutes in Retail Excellence with the new Minister of State for Retail, Damien English. And at that meeting, we raised a number of points, particularly around this new employment wage subsidy scheme. One was the concern that we had as retailers over the drop in the subsidy that was available, which is now, as you're probably aware, is €203, significantly less than was there on the temporary wage subsidy scheme. The second was our concerns over cash flow, with this subsidy being available certainly for weekly paid staff, potentially up to 6 weeks after that payment has been made by retailers. And the third was over the benchmark of the 30% decline in sales volume that needs to be, let's say in inverted commas, achieved before this subsidy kicks in. I have to say we had a very good meeting with the Minister this morning, so we're hoping there will be some movement on that, but obviously that's in play at the minute. But you've not come here to hear from me, you've actually come here to listen to Paycheck Plus and our partners. So before I go any further, let me do a quick introduction to these guys. Paycheck Plus provides an outsourced payroll service to organisations of all sizes across the UK and Ireland. They have 2 ISO accredited payroll bureaus, one located in Dublin and the other in Manchester, and they process payrolls on both sides of the Irish Sea. They process more than 500 million euros worth of Irish payroll payments and in excess of 200,000 payslips each year. And they've amassed more than 30 payroll awards. And we're joined today by 2 of their award winners. So the first person I'm going to introduce you to will be Niall Clark, who was recently awarded highly commended Global Payroll Specialist of the Year for 2019. And his colleague will be Anya Crawley, who won the Next Generation Award up to 5,000 staff at the Rewards 2019. And Paycheck Plus have been recommended to us by our partners, by our members rather, Harvey Norman. So without further ado, over to you, Niall.
Thanks, Duncan, for that introduction, and thanks again to Retail Excellence for allowing us the opportunity to present this webinar. As Duncan introduced Paycheck Plus, it'll be myself, Niall, who will be presenting the webinar today, and I'll be joined with my colleague, Anya Crawley, who has kindly offered to sift through the questions that you kindly submitted today, and we'll have the answers available for them. And when we open the floor at the end to Q&As, both myself and Anya can step in to answer the questions then. So welcome everybody to this afternoon's webinar. Thanks again for joining us. And I'll kick the webinar off. So today's agenda, when we're covering everything on EWSS, the Employment Wage Subsidy Scheme, I'm going to briefly talk just about the history of the COVID payment supports to date. We'll move then into a summary of the EWSS scheme, followed up by the employer and employee eligibility criteria, the registration process, the operation of the EWSS scheme, and we have some calculation examples to share with you too. A checklist that we've kindly provided for you to assist you on getting set up for the scheme and operating it going forward. We'll open the floor, as I said earlier, to any Q&As. So just to give everybody a little background of the history of the COVID payroll supports to date. The first support, it was a short-lived one, I think a week and a half to 2 weeks long. Many of us might have forgotten about it or weren't aware of it at the time, but it was the employer refund scheme, and it was made available from the 15th of March up until the 26th of March, and it was paid at a flat rate subsidy of 203. Revenue then moved into TWIS, or TWSS, the Temporary Wage Subsidy Scheme, and it was operated over 2 phases, initially for 12 weeks from the 26th of March, but it was further extended. The two phases, the first phase was the transitional phase. I think it lasted up until the 3rd of March. And then we entered the operational phase where revenue stepped in and provided us the breakdown of the figures, the subsidy scheme and the top up that was allowed. And that kicked in the 4th of March. So the extension of the TWSS scheme was extended to the 31st of March, and this was confirmed in June, 31st of August, excuse me, and this was confirmed in June. On the 23rd of July, the EWSS, the Employment Wage Subsidy Scheme, was announced to replace the Temporary Wage Subsidy Scheme from the 1st of September, and it's due to last until the 31st of March 2021. There is talk that they may extend that later. That might be announced in the October budget, or it might be announced later on, but at the minute it's due to last up until the 31st of March next year. TWSS and EWSS will run in parallel for July and August, with a sweep back in play for July and August for new workers and seasonal workers. So there's been a lot in that to date since the first scheme was in operation. And I'm sure, look, with the way it was rushed out, and I think version 1 was maybe 6 pages. We ended there the other day on version 18, which had 79 pages. So there was a lot in that to get our head around. At the minute, we're on version 1 of the EWSS scheme. I know there is changes. Duncan spoke about some of them that are potentially coming down the line. Hopefully, we'll have enough time to prepare for those. But again, further on the slides, we have further information and links to our website that can help you keep up to date. So, a summary of the EWSS scheme that we know as of today. EWSS is open to employees who file PSRs through revenue electronically, and only available to those who are mandated to complete their returns electronically at the minute. So you must be registered for ROS and making your PSR submissions electronically. The scheme has 2 elements. The first element is it provides a flat rate subsidy to qualifying employers based on their eligible employees. And the second element is it charges a reduced rate of employers' PRSI at 0.5%. The scheme is administered on a self-assessment basis by revenue, so there's no need to prove the employer eligibility at registration stage, but revenue have asked that you retain evidence of your eligibility checks for further down the line if they're going to carry out any compliance checks. The scheme is paid directly into the employer's bank account once a month in arrears after the return due date of the 14th of the following month. That's a little change to, I suppose, the TWSS that was paid in advance. But it's now going to be paid in arrears. And the Minister of Finance will continue to monitor the economy and may amend the scheme, specifically the end date that I spoke about earlier, the rate of subsidies payable, and the turnover test to determine employer eligibility. On to employer eligibility. So employers must demonstrate first that their business has significantly disrupted by the COVID-19 pandemic, and have at least a 30% decline in turnover or orders from the 1st of July to the 31st of December 2020 as a whole, not each month individually, compared with the same period in 2019. There's a few slight conditions here if your business wasn't already in operation from the 1st of July to the 31st of July last year. So if your business commenced between the 1st of July and the 31st of October, the 30% deduction is based on the operating period in 2019. If your business commenced after the 1st of November 2019, the 30% reduction is based on projected turnover or orders between the 1st of July and the 31st of December this year. Employers are required to continuously review eligibility on the last day of each month and deregister where conditions are not met. So on the last day of every month, you're going to have to reevaluate your eligibility tests and see that you're still within the 30% reduction. If you feel that you're not, then you must deregister. If at a later stage it turns out that you are, you can re-register. But there's no backdating of that scheme. So if you had entered the scheme, you deregistered, If you have to re-register, the scheme is only available from that date of re-registration. There's no further backdating allowed. Employers must possess a valid tax clearance cert to enter the EWSS scheme and continue to maintain tax compliance for the duration of the scheme. Employers can check their current tax clearance status through ROS. This is electronically and it's updated real time, so you're able to go in and check your eligibility or check that you do hold a current tax clearance cert real time. If there are any outstanding returns or liabilities, your tax clearance will be refused. Therefore, it is very important that all your tax returns are filed on a timely manner and all payments are made to date. If you've got any outstanding payments, you must enter into arrangements with revenue to cover all those outstanding liabilities. Qualifying employees. So a qualifying employee is anyone who receives a payment at any time between the 1st of July and the 31st of March 2021. That's the duration of the scheme. So any payment that's received between those dates. There's no restrictions on new employees or seasonal workers. So that's anybody who would have started from the 1st of July. There is some exclusions. The first exclusion is connected parties. So that's basically your family tree who were not on the payroll and paid at any time between the 1st of July 2019 and the 30th of June 2020. This is basically to stop any businesses putting connected parties onto the payroll now that weren't on the payroll prior to this. And then there's certain direct proprietary directors that are not included. Now there's a link, and when we share the slides, you'll be able to see the link because guidance came through there the other day from Revenue to state which proprietary directors. Initially it was all, but now there are some proprietary directors that are allowed to enter the scheme. The Act also includes a specific anti-avoidance provision to minimize abuse if employees were to manipulate payroll or employment patterns to maximize subsidies, and compliance checks will be carried out by Revenue on an ongoing basis. In short, I suppose this basically goes back to that connected parties. Don't put any connected parties on the payroll now if they weren't already on the payroll in July 19 and the 30th of June this year. And then one of the other measures is if you've maybe got one full-time person, you want to lay them off and replace them with 2 part-time people, Revenue will be looking out for those sort of patterns and they'll deem them to be in abuse of the scheme. So, registration process. Employers must make a self-declaration through ROS. The registration has been open on Revenue since the 18th of August. Regardless of whether you are registered already for the TWSS scheme, a separate registration is required for EWSS. So you can't just assume if you had been in or availing of the TWSS that you automatically transition over to EWSS. You must carry out that separate registration. Employers must be PAYE and PRSI registered, hold a valid tax clearance cert, and link a bank account in order to successfully register. So the linking of the bank account, once you register for EWSS as a new tax head, that will show up in your managed bank details. And from there, you must add your PAYE bank account in order for the refunds to be refunded to you in a timely manner. Registrations can't be backdated. So I suppose the sooner the registrations are made, the better. If you make your first claim under EWSS and you have not registered, that claim will not be successful. It'll be rejected by Revenue. Revenue will provide a template for employers to complete for those eligible employees hired since the 1st of July who did not qualify for TWIS. This is basically the new hires and the seasonal hires. Now, initially Revenue have said that this template will be available to upload through ROS, and the deadline is the 5th of September. Now, given that we're the 2nd of September and Revenue have yet to release that template, I see that that date of the 5th of September is going to be extended. And I think that we're talking about maybe mid-September at this stage. They've had some difficulties from a technical point of view. So, operating the EWSS, the Employment Wage Subsidy Scheme. One of the big key things here is normal payroll processing must resume from the 1st of September. So you must remove all identifiers that had a J9 PSI class and revert everybody back to their pre-TWSS PSI class. That may not be A for all, it could be S for some directors, etc. But no more J9 submissions will be accepted by revenue. Employers' PSI should be calculated as normal in the payroll submission, so that will go back to the normal rates. What revenue will do is, on the monthly statement, they will perform a recalculation of employers' PSI to the 0.5%, and they will give this as way of a credit against the monthly statement that's submitted. Nothing is to appear on the employee pay slips, so the employees will not be aware that you're claiming for them. This is different to the TWSS, where you would have had to clearly label the subsidy and any top up separately on the pay slip. There'll be no distinction or visibility on the employee side of things through payroll or via their pay slip, so they won't know that you're availing of the scheme for them. An EWSS indicator must be selected on your payroll submissions, your PSRs to revenue. This could be a tick box depending on your software provider. So I would urge you to check with your software provider on their latest updates how this indicator will be selected. For most of them that we've seen today, it seems to just be a tick box for you to say opt in or opt out. Some other payroll softwares may require you to put a value. If you go back to the TWSS, if you can recall, you used to have to put 1 cent through in order to trigger it. It may be something like that on certain software providers, but most of them seem to use a checkbox indicator to opt in and opt out. So just make sure that you have those selected accordingly. So operating the EWSS, at the minute there's 4 bands, only 2 of them are eligible. So for those employees with gross pay of less than 151.50, no subsidy is available. For those earning a gross pay between 151.50 and 202.99 will be entitled to the first flat rate subsidy of 151.50 per week. For those earning between 203 and 1462, they will be on the second rate subsidy, which is 203 per week, and anybody above 1462 per week will not be entitled to a subsidy. There was some confusion about what constitutes as gross pay. I've put this together to try and make it as simple as possible, but my understanding and best way to describe what gross pay is constituted as, it's any payment that is either PAYable, PRSIable, or USCable. I think revenue's description of it is anything that includes notional pay, a forced salary sacrifice like to work schemes, travel passes, etc., and any pension deductions, excludes non-taxable pay, and excludes DEASP benefits mandated to the employer, which are reimbursed tax-free through to the employee through the payroll. So that might be any maternity, paternity, sick, anything like that that the employee has mandated to the employer directly. But I do feel that the definition of gross pay is easily understood by anything that is PAYable, PRSI, or USCable. On to the calculations. So the first slide that we have here is calculations of the subsidy amount for weekly paid employees. So I've given 2 examples here. The figures are the same. The only difference being is the insurable weeks. So in the weekly payroll run, your insurable weeks are allowed to range between anything greater than 0, but anything equal to or less than 5. So you can have 1, 2, 3, 4, 5 on a weekly payroll submission. If the insurable weeks is greater than 1, the gross weekly pay is determined by taking the gross pay that's on the PSR submission. So again, that's anything that's PAYE, PRSI, USCable, and it's dividing it by the insurable weeks to give you the weekly gross pay. The total subsidy then is the relevant weekly subsidy multiplied by the insurable weeks. So in the examples above, if you can see there for the first person, their gross pay on the PSR submission is €345. They've got 1 insurable week, so their gross weekly pay is 345. That falls into the second flat rate subsidy between 203 and 1462. So the weekly subsidy available to the employer is 203. And that weekly subsidy is multiplied by the insurable weeks, which in this example is 1, so it's 203. In the below example, it's the same figures. but the gross pay is 345. They have 2 insurable weeks. They may have started in a previous pay and had arrears. They might be on holiday pay for the next period, so you'll give them 2 insurable weeks. You'll have to divide the gross pay by the insurable weeks to give you the weekly gross pay. That will fall then into the first rate subsidy, which is 15150, and then you're able to receive 303 because it's the subsidy of 15150 multiplied by the insurable weeks. 303 is what revenue will refund back to you. In Fortnightly, it operates quite similar. So the available insurable weeks in a fortnightly category, again, like the weekly, it's anything greater than 0, equal to or less than 5. The same basis applies where you take the gross pay, divide by the insurable weeks to give you the weekly gross pay. Then that weekly gross pay will fall into flat rate subsidy 1 or 2. That's multiplied again back by the insurable weeks to give you the total subsidy that's due. So in the first example there, it's 2 insurable weeks. Gross pay divided by 2 gives you the weekly pay. That falls in the 203 category, and you're entitled to 2 weeks of that subsidy to 406. In the second example, it's just multiplying it, dividing it and multiplying it again by 3. 4 weekly payrolls operate the same as the above. And I suppose on to the last calculation one, which is the monthly. This is a little bit trickier. I'll just load these up. So available insurable weeks, instead of it being 0 to 5, it goes anything greater than 0, but equal to or less than 9. So if the insurable weeks in a monthly payroll are 4 and 5, depending on your software and what way the payroll calendar is set up, Revenue have basically declared that monthly payrolls will either be 4 or 5. So that's one rule that will apply. What you'll have to do in that basis is you'll have to annualize the monthly gross salary and then divide it by 52 to bring it back to a weekly gross pay. That weekly gross pay then will be assessed against flat rate subsidy 1 or flat rate subsidy 2. You will take that subsidy and then you will perform the reverse of that calculation. You'll multiply that by 52 and divide it back by 12 to get the monthly subsidy that's available. If your insurable weeks on your monthly payroll, for whatever reason, maybe you had a start or mid-month or a leaver during the month and the insurable weeks may not be 4 or 5. If you use anything else, 1, 2, 3, 6, 7, 8 or 9, the method of calculation is similar to that to the weekly, where you don't have to annualize it again, you're just going to go on insurable weeks. So in this example, you'll see the first two are the same. It's just showing 4 and 5 weeks. So that's where you'll multiply the gross pay by 12 divided by 52 to get the weekly gross pay of 796. That falls into the 203 category. And then you don't multiply that by 4 or 5, multiply it by 12 divided by 52 to get it back to the total subsidy for that month. Where it gets a little bit trickier is for that second example where it's not 4 or 5 weeks. But again, if you look back at the slide on the weekly one, it's taking the gross pay, dividing it by the insurable weeks to give you the weekly gross pay. You'll determine which flat rate subsidy tier that will fall into, 1 or 2, and you'll then multiply that by the insurable weeks. Bi-monthly payroll as well operates the same as the above. So 4 weekly will be the same as fortnightly, bi-monthly will operate the same as monthly. Some PSR errors or warnings that you may receive when you are submitting your first claim under EWSS. We've listed a couple that we've got here from Revenue. It may not cover all of them, but it's the common ones that they've seen through their testing. So the first error that you may see is the obvious one. The PSR submission may contain a J9 payslip with a pay date after the 31st of August. And if we go back to a previous slide, the scheme is to operate as normal. No more J9 submissions are allowed. So that's a safeguard and a check that's in place. If you receive that error, it will not allow you to submit the PSR. So you'll have to go back, identify those J9 submissions or employees with a J9 class, correct them to their pre-COVID PRSI class, and attempt to resubmit your PSR submission. Another error is if the employer is not registered for the EWSS scheme. So when the PSR submissions are being made electronically, there's safeguards in place that will communicate from the software to Revenue, and it will spit back an error saying you're not registered for the scheme. So it's important that you get registered. And it will also spit back an error if the employer does not hold a current tax clearance there. Some warnings that may appear. These warnings will still allow the PSR submission to be submitted to revenue, but it will come back with a warning. The first warning that may appear is the EWSS payslip weekly gross is not in the range. So again, that goes back to your tiers. It's not in the range of €151.50 up to 1462 per week. It'll throw an error basically saying you've marked this employee as eligible, but given the gross pay that you've reported, it's actually outside that range. The second one then is the EWSS pay frequency is not on the agreed list. So revenue have said that they will cover all payroll frequencies up to and including monthly. They won't cover quarterly, annual and biannual submissions. They're excluded from the scheme. And finally, the EWS insurable weeks are not within the range for the given pay frequency. So again, on the previous slides, weekly was anything greater than 0, but less than or equal to 5. If you submitted a weekly payroll that had more than 5, it'll come back with a warning saying that's not within the particular pay frequency. And again, for monthly, it only allows you more than 0, less than 9. So if you had more than 9, it'll come up with a warning too. We've provided this handy checklist, so I'll go through these one by one. Feel free when we share these slides to print these off. We found them quite useful. We've used them ourselves when we are transitioning over. So the first one is to check that you have met the eligibility test, that you have obtained a current tax clearance cert, that you have registered for the EWSS scheme via ROS. Payroll software update. A lot of the payroll software guys would have run webinars last week, and I think most of them would have released updates as well. So it's important that you book them software updates, that you book them through either if you do them yourself or through your IT provider. But it's important that you get them up to date as soon as possible before you submit your first submission. If you don't do those software updates, you won't have the tick boxes in play to be able to submit it. Make sure that the EWSS indicator is selected. As I said, some of them use a pay code, like that 1 cent, to be able to mark the indicator. Most of them have a tick box, which is an opt-in or opt-out. So it's just making sure that you have selected the correct opt-in and opt-out checkbox for those employees that you intend and availing of the scheme for. That you remove all J9 PSI classes from the payroll submissions and the employees' master file records, and that payroll is resumed as normal. So what we basically mean by that is through the TWSS, a lot of stuff might have been parked or paused and allowed to be parked and paused. So you probably need to reevaluate any additional allowances that you may have had that you stopped during TWSS, any notional pay, benefit in kinds, etc. And also any non-statutory deductions that you would have stopped, because if you can recall from TWSS, you weren't allowed to make non-statutory deductions that would eat away at the subsidy scheme amount. So you may have stopped any of those. So you have to make sure and reevaluate that you resume them as normal. Your payroll is validated to ensure employees' opt-ins are accurate. Again, this goes back to maybe reaching out to your payroll software provider. Some of them have been kind enough to put validations or reporting in place that will allow you, after you've prepared your payroll, but before you've submitted to revenue, to be able to validate and check the data. And that will basically assess what the gross pay is that you're submitting to revenue, that your insurable weeks are in line, your PSI class is correct, and it'll spit out any warnings or errors that we discussed earlier before you make that submission. Some payroll software providers haven't provided any of those reports, so you may need to look into how you're going to evaluate them yourself, whether it's an existing report that you have, maybe a gross net report, or whether your software has the functionality to be able to produce a bespoke report that you can use yourself. It's best to maybe touch base with your software provider on that one to see if they can help in any way. So some further reading, we've produced just a couple of links here for you to be able to do a bit further reading on. The first one is just a link to the revenues July jobs stimulus detail. That'll give you various details, one of those being EWSS, and that should be updated real time. So you can click on that link, save it as a bookmark, view it on a daily basis. This link then is to the, I think it currently stands at 21 pages. This is, we're calling it version 1 of the EWSS guidelines. So that's available via this link. And again, when we share the slides, you'll be able to interactively click on these links. Revenues TWSS latest FAQs. Although TWSS has ended, there's still going to be a reconciliation process that's going to need to be carried out. So we would advise that you would just keep an eye on that link. Version 18 covered off some topics in relation to the scheme ending and what's going to happen come October for reconciliation purposes. So it's good just to keep an eye on that to see if anything has been updated. We've got a link then to our website where we try and do workshops or webinars like this, where we try and go through the legislation, the heavy stuff on your behalf, and try and summarize it into an easy way to understand. So keep an eye on our page. We try and keep that updated with client comms on a daily basis. We've provided a link as well to DASP's support page. Revenues Business Division Helpline. This is critical. If you've got any queries, I suppose, in relation to your eligibility tests, revenue are basically saying, just drop a quick call into either the employer's helpline, which is the number there, or you can click on that link where you're able to put in your tax registration number and it'll give you a direct line to your business division support center, and they'll be able to talk you through any, I suppose, anomalies or any uncertainty you have around the eligibility tests. So thanks for listening to me there through the presentation. I'm going to open and hand over to my colleague Anya, who has some answers at the ready from the ones that you submitted. So thank you for those who submitted questions. I'm sure a lot more have come in this time that we can talk through now. So thanks again, guys, and I'll pass you over to Anya.
Perfect, Niall, thank you. So I just want to start off by saying thank you to those who submitted their questions prior to this webinar. I'll start off by answering the ones that was previously submitted, and then I'm conscious that there is a few coming in as Niall was delivering his speech. So I'll go through these and then I'll get back to the ones that have come in. So the first one we'll start off with is it conducted on a month-by-month basis? So this is the eligibility. So if your business had 65% of 2019 turnover in September, but then 72% in October, is not eligible for the wage subsidy, or is it an aggregate? Yeah, so the EWSS eligibility is based on July to December 2019 as a cumulative, rather than by a month-by-month basis. So you need to take that period of 6 months as a whole. Employers are then asked to continuously review their eligibility on the last day of every month to ensure they continue to meet the eligibility criteria. Sharon, this comes back to your question on how do you forecast for those months. So basically, there was no criteria and there was no going back on your turnover for July, but as this scheme has commenced, you add July and August into this month, 6 months, and then base that off the same period last year. So just another wee quick one. It can be applied to new staff also. Is this correct? Yeah, so unlike the TWSS, the EWSS is available to all new hires and seasonal staff as well. Thirdly, I can't see where to register for the EWSS scheme on ROS. I suppose unlike TWSS, where we were submitting it through my inquiries, revenue have made it that wee bit more complicated for us all. So I have included a few screenshots here. So when you log on to your ROS account, you'll scroll down to the very bottom of the page. On the left-hand side, you will see this Manage Tax Registration. You click that link. After you click that link, you will get a e-registration screen. Down the very bottom of that, you will then see the Employment Wage Subsidy Scheme. If you select Action, and then you want to add and link to a new registration because you haven't actually created that registration in the first place. Once you click that, you will be brought through a number of screens with the declaration that you declare you meet all the eligibility. One thing to note is that if you had your bank account linked for the EWSS refunds, you need to relink your bank account for the Employment Wage Subsidy Scheme. And then I suppose I would encourage all employers who have a weekly paid payroll that you should register as soon as possible to ensure that you are registered and linked in time for your first pay period, as I know the bank accounts are taking that wee bit longer to link. Question 4 we received was, is it €200 per staff member per week? Must each staff member be a full-time member or work in a certain amount of hours a week to qualify? There is no guidelines issued by Revenue in relation to full-time and part-time employees. It is based on what that employee's gross pay will be for that week. If it falls into the 15150 to the 202.99, the employer will receive a subsidy of 151.50. If the employee's gross weekly wage falls into 203 and 1462, the employer will receive a subsidy of 203. Unfortunately, at the minute, anything below the 15150 doesn't receive any subsidy support, and any gross pay over 1462 doesn't also receive any subsidy. Question 5, this is quite a detailed one. With the changes in the rules regarding the EWSS and the processing of payroll and normal deductions of payroll taxes returning, I have been approached by an employee in relation to the employee's contractual obligations under the TWSS. The TWSS forced employers to pay employees their net wage as a maximum payment. With the impending taxation of this net pay, including the subsidy amount, my employee is asking, am I obliged under his contracted salary rate to pay him the difference between his net pay and the gross rate in his contract? So what I would say to this is the TWSS didn't force any employer to pay their employees their full maximum net wage. The TWSS gave the employers the option to make an additional gross pay to the employee, which fully or partly made up the difference between the employee's subsidy and their average net weekly pay. The employer had no obligation to make an additional payment apart from that 1 cent. In relation to the contractual obligation under the TWSS, this falls under employment law and the employee's terms of conditions of employment rather than taxation, and therefore we wouldn't be able to answer this. You would have to seek advice from a HR or employment law specialist. However, what I will say is that if you were changing an employee's contractual pay from their terms of employment, you should have a written agreement stating what you're going to pay them and how long this is in operation for. And then based on that will determine how you proceed. So question 6 is, it states that in order to be eligible for this scheme that you need to provide that your business has experienced at least 30% decline in trade, and this decline factors in sales orders and state aid received during the 6-month period. My questions are as follow. Is the Restart grant considered as state aid? Monies received from the previous EWSS scheme, is this also considered to be state aid? Surely both of the above schemes are not to be factored in when calculating your sales for the 6-month period. Revenue states that subsidies received are taxed on the employers as part of their trading income, but are ignored in the calculation of the 30% reduction in turnover. And there is further guidance in that on Revenue's website under the guidelines for employment wage subsidy scheme. Question 7 then is similar to the eligibility criteria. We opened our toy store section in July. We had a sale and promotion as well as several new releases, which caused a spike in sales. Our average loss for the business since March was 40%, and in July was only 20%. Now with the new 30% benchmark, our losses for the year to date since March are 36%, but our losses for July, August are 27%. Okay, so what I would say to this is you need to forget about March. You need to forget about any months prior to July, because the condition is July to December this year versus the same period as last year, unless you are one of those new businesses that weren't trading in this period. For more complex businesses structures to assist with their determination and eligibility, further guidance is available on the revenue guidance, as I spoke about in the previous question. And Revenue have also said that should you need any further assistance, to speak to the business division unit, as Niall spoke about earlier. And Sharon, in relation to your question about different locations and different business locations, it depends on the structure of how that business is set up. So you would be best to ring that relevant business division for yourself. And then I just want to make you aware that the EWSS is substantially different to its predecessor, the TWSS, and its implementation process may prove complex for your organisation. Should that be the case, Paycheck Plus are delighted to offer Retail Excellence members 1 month's free processing plus 50% off the setup fee. So we will be delighted to talk to some of you and see if we can help you in your payroll process, and hopefully then you would engage in the payroll services that Paycheck Plus offer. I'm now going to open it up to the floor and ask my colleague Niall to join me in answering the rest of the questions. So just bear with me a second, folks. Let me see.
That's brilliant. You can hear me, guys? Yeah, all loud and clear. That's brilliant. Thanks, Anya, for doing, as I would say, probably the harder work in answering those questions than delivering the scheme. So if we can probably jump into the Q&A section at the minute on the live webinar. I see that there's 5 questions here that I'm seeing on my screen at the minute. Anya, I don't know if any of these were covered or if the ones that were covered were the ones that were submitted in advance. I suppose we can start with the first one here for Tom.
Tom's question is, if I claim as my business is down 30%, say September and October, but goes back up again in November, do I owe that money back? As far as I'm aware, Revenue say that all subsidies that are claimed correctly at the time before deregistration will not have to be paid back, or not repayable.
Yeah. I think Revenue have tried to kind of reiterate as much as possible that they're going to take a fair approach on this. So if you've initially done your eligibility test and you can retain those records on that eligibility that showed, yes, you were eligible to begin with. And it subsequently turns out through monitoring or whatever happens in the business that it does go up. I suppose the way that they've worded it at the minute is due to that real-time monitoring. If you feel that it goes up, deregister, but there'll be no look back on any claims that were made because you didn't know at that time. So I think they're taking a fair and reasonable approach on that one, but they will expect that if you do feel that you're going to breach that you deregister straight away. And again, if it turns out you don't, you can re-register.
Yeah, absolutely.
So we've two questions here then next on you from Sharon, if you want to read them out.
Yeah, so the 30% decrease in turnover, you mentioned it looked as a whole from July to December. How is it possible to figure out how your sales will be in a month or 3 months' time so you can register for EWSS?
Good question. Good question. I suppose this is where you probably want to touch base with your financial accountants. So the only way that you can do this at the minute is on projected turnover. There's no other way. It hasn't happened yet. It has to be on projected turnover. Your financial accountant should be able to help you, or your management accountant should be able to help you on that one, whether it's internal or external. But I suppose it's just about retaining the records that you used to justify your eligibility, whether it be the turnover test or whether it be customer orders. Again, it goes back to revenue being somewhat relaxed about this, that if you can retain those records and you show that you made an honest attempt at projections, then you should be fine. But again, it is just projected figures because we just don't know.
Yeah, absolutely. And Niall, Sharon has a second question there. If we have one employer number, so one employee register number, but a few different locations, if some locations are down by 30% and others aren't, can we apply per location?
Yeah, so I would say when we share the slides, we will share a link obviously to the version 1 of EWSS, and on the end of the revenue version, there's an appendix 1 which kind of covers any additional guidance in relation to the turnover test or the customer order tests for any of those, I suppose, difficult cases to determine. On the face of it, one individual employer number is seen from revenue as being one entity. So it's that entity's turnover or customers' orders as a whole. But they do mention that if you have an internal business structure that does classify income and expenditure to those different locations separately, that you should be allowed to apply it for employees that work more than 50% of their time in those locations as opposed to anything else. I think one of the examples they used was head office staff, where if you're able to see, look, head office is separate to store locations, for instance, and you're applying for the head office guys, if any attributable turnover costs, anything like that, that can be from a business structure be identified as head office related, and that meets the test, then you should be able to. But as Anya said on one of the answers to the previous scheme, is best thing to do if in doubt is contact revenue. They are very helpful and they are there to assist as much as possible. Contact your local business division, explain the structure of your business, and they'll be able to talk you through the correct eligibility criteria if it is in fact you want to apply it to some stores within one general registration.
Yeah, absolutely. I think that's the best thing to do, communicate with revenue at all times. Another question in here, Niall, is currently we do not meet the eligibility criteria for EWSS. However, as it is extremely difficult to make projections for the next few months, we may become eligible in the future. Do we need to register now, even though we may not avail of the scheme for a while, or indeed at all? So revenue haven't actually said whether there is any implications of registering and not using the scheme, but it may just be a case of your name is published on the revenue web.
Correct. I was going to say that on you. Yeah, I think if you do the initial registration, you're going to be on that publication list because it's grant money, and revenue will publish that list. In theory, you could register for it. you would have to make sure, if you weren't using the scheme, that you didn't use any of the indicators on your payroll to state that you were. And I don't know, because at the minute Revenue haven't confirmed what their compliance checks or how they're going to conduct those. I don't know if they're going to conduct them on the basis that, oh, employer A has registered, but we see on their PSR submissions to date, a month or two down the line, no submissions have been made. They might communicate to you via your ROS inbox or through my inquiries to ask you, what the story is. But in theory, if you wanted to get ahead of it, there isn't really any guidance saying there that you can't.
No, and there's also no guidance on a closing date for registration. So if you weren't eligible now and you were then in a month's time, you could register later down the line. Revenue haven't.
Yeah, and I would say again, I suppose on a further note on that question, is the registration process is real time. It's a few pages on a wizard that you go through on Revenue. You're basically just putting in, yes, you've signed the declaration, here's my bank account details, and you put in the start date of the claim. It is very straightforward. You will know of the registration real time, and the tax clearance cert as well is real time too. So if you feel that you're maybe not eligible now, but you may be later, don't necessarily worry about doing that registration now, because it is a very, very, very quick and real-time thing to be able to get. We've done registrations to date. Anya's probably done more of them than I have at the minute, but it is a quick enough process to be able to do. The longer part, I suppose, is the eligibility criteria and making sure that you meet that 30% decline in turnover and orders. Absolutely,
yeah. You get the confirmation straight away that you're registered. It is just that linking the bank account is taking that wee bit longer. Dimpina has a question in here. If I can't update my payroll software until next Monday, can I submit my payroll to Revenue then, even if it's paid tomorrow, Thursday? Dimpina, it's a sticky one, because if you don't submit to Monday, you're breaking the PAYE modernisation rules in remaining compliant. But if you can't get your update until Monday, you can't actually tick that you want to avail of the EWSS. What do you think, Niall?
I would say reach out to your payroll software provider first. And if it's a case that they're saying it's not available, I would try and push a little bit harder, because it should be available. The scheme is effectively in operation since yesterday. If it's a case that internally you can't get the payroll software updated until Monday, and it's not an issue with the actual update being available, there is an option on you to be able to submit the PSR details manually through ROS.
Yeah, depending on the number on the payroll.
If you've got a lot of employees, I would say no. Don't do it, because it is a manual process. You have to put in a lot of employee master file records in place to be able to add them to the selected employee list. Then you have to select them and enter in all their pay figures, all their tax figures, insurable weeks, etc., and mark that indicator. It is a potential option if you want to do that and not miss that submission or getting the subsidy for that submission. But if you're talking big numbers, that's quite an onerous task to do. If it's small numbers, you could go in and do them one by one. Yeah, that is another option. But I would, if it's the payroll software, reach out to them and demand that you have it. If it's internal, maybe you need to push back on the IT guys or whoever it is that's updating it to make sure that it's updated in time.
Yeah, Karen, I see you've come in with a question. We are lucky that our business is doing so well and we're not eligible to register yet. I hope Niall has answered that in the previous question. What happens if we take a significant downturn and become eligible? Can we register at a later date? As far as we're aware, there's no closing date for EWSS registrations as of yet.
Yeah, so I would say in short, Anya, the answer to that one is yes, register at a later date, absolutely.
Absolutely. And Caroline has come in here. Can employees take holidays on this scheme as they couldn't on TWSS? This isn't an employee subsidy scheme that we're operating now, Caroline. It's an employer subsidy scheme. So as far as employees are concerned, their pay returns to the new normal, as we say. There is no there's no reason why they couldn't take holiday, because you would just be paying them holiday pay and getting reimbursed them from revenue of the subsidy amount.
Perfect. Thank you, everybody. Thank you very much, Anya. Thank you very much, Niall. That's really useful and extremely timely. Certainly, everybody, we will send on the details of the slides, so you've got them. I'm sure if you've got any more questions, keep them coming through. We will do our best to answer them. And feel free to visit paycheckplus.ie. Just a couple of points from me before we close. I think one of the questions or one of the comments we made to the Minister this morning when we were talking about this whole subject was the 30% decline in turnover, and certainly the recommendation for retail was that steep. It's a stiff ask to ask retailers to be 30% down before they get this type of subsidy. So we were talking around the need to have a more tiered approach and maybe have something at a lower level, so 15-20% down as being a more realistic option. So that's certainly something that we're pressing government for. Just before I close, this is the first, or probably the second now, of a series of ongoing webinars. There is another one coming rapidly down the tracks tomorrow afternoon with Alan O'Neill, who is a speaker and columnist with the Sunday Independent, on a guide to growing sales through amazing customer experiences in a COVID-19 world. So if you have some time tomorrow afternoon between 3 and 4, please feel free to drop onto that one. I'll be interviewing Alan at the end of it. He's a great speaker. I'm sure you'll get a lot out of it. And finally, just a big thank you again to Anya and Niall. Great opportunity. Thank you for coming on, and all the very best to everybody. Thanks for your attendance today, guys.
Thanks, guys. Thanks, Duncan.